The market had a very big reversal day today, and I want to show you the technical implications of these hopes that war is coming to an end soon. I'm going to take you very quickly through this using Swing Trade Bot, my favorite stock scanning tool. Notice the signal that dominates all of the indices except for the Dow is the bullish engulfing pattern. This also was it was the most active signal today, a most unusually active signal today, and it's very bullish. So I want to take you through these implications. But what is a bullish engulfing pattern? First, let's look at it in words. It's important because it is most meaningful when confirmed by volume or when it appears at a key support level. It is commonly used by candlestick traders and technical analysts seeking to catch early signs of a trend reversal. And that is what could be underway right now in the market as hopes for the end of war suddenly increased. What does this look like? Well, this pattern occurs when a small red bearish candlestick is followed by a larger green bullish candlestick that completely engulfs the previous day's real body. Let's go ahead and take a look at what this looks like in pictures. Here is the S&P 500 using SPY. I put a circle around it. Here is the red body. This was on Friday. When we had a 1.3% loss as the war continued to expand, the war against Iran continued to expand. And then today, we had a big gap down. I think it was down maybe a 1.5%, maybe almost 2%, and then finished the day up 0.9%. Notice how this green body completely engulfs, let me just zoom in for you here, completely engulfs the previous day's body. It's at the end of a downtrend. Now, it's not so easy to see the downtrend because the index has been grinding down very slowly, but this is essentially a downtrend, and it's definitely part of bearish action because it's a breakdown below the 50-day moving average, which is that red line. All right, before I go into the individual stocks that show this bullish engulfing pattern, let me take you really quickly through the important indices. This is the percentage of stocks trading above the 50-day moving average, is what I like to call AT50 for above the 50. Check this out. At the lows of Monday, March 9th, 2026, it perfectly matched the previous low. This was from November. Yeah, from November. And it bounced picture perfectly. This is an indicator that a bottom is likely in. This is important because I've been talking about this for a while now, since January, when market breadth made a bearish pattern right here. I won't go into all of that. You can check out previous videos or my blog at drdurr.com/122. Fundamental bottom line point here is that I don't consider market breadth to be in a bearish cycle anymore, and the beginnings of a bullish cycle may be underway. All right, we still need some confirmations and things, but this is very positive. All right, let's take a look at the other indices. S&P 500, this is the index now, not just SPY. Reminder that on Friday, what happened was we had a gap down, not just because the war was expanding, but also a very bad jobs report, 92,000 jobs lost. Just zoom in here again. You can see very clearly the bullish engulfing pattern. At the lows, the S&P 500 didn't quite meet the 200-day moving average support. I would have preferred a bounce off of that level. That's the blue line, but we'll take what we can get. The NASDAQ, on the other hand, did bounce perfectly off that 200-day moving average, and this means the NASDAQ is on its way. It made let's call it a doubly bullish bounce. All right, let's zoom out so you can see the implications. The downtrend, again, is not steep, but still this technical pattern must be respected by both bulls and bears. And finally, IWM, the ETF of small caps. It also had a bullish engulfing pattern. It, of course, was already overextended well below this lower Bollinger Band, which describes 95% of the price volatility or price action around the 20-day moving average, which is the dotted line. Of course, so it fell far short of testing its 2-day moving average, but I'll take it. And my latest trade on IWM call options worked out pretty well. And finally, we have the VIX, the volatility index. On Friday, it soared 24%. On Monday, huge gap up. I mean, it hadn't been this high since back in April when we had that tariff drama, trauma, and noise. And this is pre-market action for March 10th. I'm not going to cover this because I don't really consider these signals real until the market opens. Just remember that this massive fade is typically a sign that volatility is peaked out. Now, before we get too excited, there still is this overall uptrend defined by this purple line here that's still underway. So we're not in the clear until this uptrend comes to an end. All right, let's jump right back into Swing Trade Bot. Let me just show you how this scan works for the bullish engulfing pattern. I went to my advanced filters, and I only want to get stocks that are above the 200-day moving average because these are the ones I'm going to consider to be very bullish. Anything under the 200-day moving average still has a lot more work to do. I filtered down to stocks with a minimum average volume of 200,000 and a minimum price of 10. And then I did find stocks. I scrolled down to the bottom. I saw there's about 8 pages of it. That's very manageable. So I scroll back up, and then I go to as charts, and then I start to filter down. Now, I already did some pre-filtering, so I'm not going to take you through my individual charts, but just know that I skipped essentially. I did not really consider healthcare or drug stocks, financials, or energy stocks. I really wanted to keep those out. I look at those under very special circumstances. And I also prefer to look at stocks that had a test of a 50-day moving average or went through the 50-day moving average or bounced off the 200-day moving average, had a lot of space left to rally into 50-day moving average resistance, the 50-day moving average being this red line. So let me just quickly take you through. I'm not going to, hopefully, I'm just going to go really quickly through these stocks. If you're interested in any of these patterns, just hit the pause button. The name of the stock is up here in the upper left corner and the ticker symbol. But I want you to just really focus on these different patterns. I'm going to walk you really through it. So LSCC, I love this one because it's reversed a 50-day moving average breakdown. Modine Manufacturing Company, ticker symbol MOD, again, perfect bounce, almost perfect bounce off the 50-day moving average. And again, bullish engulfing. This is a AI play, power cooling for data centers. On semiconductor, a lot of semiconductor stocks made the cut. I already have a small position in the VanEck Semiconductor ETF, SMH, so I did not put in too many individual semiconductor indices, but I really like this one because of the near bounce off 200-day moving average support. This is Quinity Electronics, ticker symbol Q. I'm probably not going to buy this one, but if it goes above the 20-day moving average, which is that dash line, then it might be of interest. Here is Regal Rexnord Corporation, ticker symbol RRX, perfect bounce off that 50-day moving average. Teradyne, ticker symbol TER, again, nice bounce off the 50-day moving average. Train Technologies, ticker symbol TT. I like this reversal from a 50-day moving average breakdown. And then Analog Devices, ticker symbol ADI. This is looking pretty good. Oh, and by the way, for those who want to, for my trades on any of these patterns, my stop loss will be below the low of the bullish engulfing candle. That's another reason why these bottoming signals are great, because it gives you a very clear risk management rule. So if the stock closes below the low of today, the low of this candle, so let's take ADI for example, the low of this candle was $307.22. If it closes below that, I'm out of the trade. And this is doubly important to get out the trade because then it's below the 50-day moving average again, and it becomes bearish. Okay, hopefully that makes sense. And then AEIS, ticker symbol AEIS, Advanced Energy Industries. Didn't quite get to the 50-day moving average, but I'm keeping an eye on that one. Applied Materials, with ticker symbol AMAT. Hopefully you're seeing the pattern, right? It broke down below the 50-day moving average and recovered. AMAT, ticker symbol AME, same thing, recovered above from a 50-day moving average breakdown. Sorry, this is not supposed to be the Australian index. This is supposed to be ASE Technology Holding, ticker symbol ASX. Perfect bounce off 50-day moving average support. Avnet, ticker symbol AVT, bounce away from the 50-day moving average support. Brunswick Corporation, ticker symbol BC. Now here's an example of one that bounced off its 200-day moving average support, but I like this distance. I like the prospect. Let me just show you very clearly here. I like the prospect of this stock getting back testing 50-day moving average resistance. Okay, so that's the profit range that I would be targeting for a stock like Brunswick Corporation, ticker symbol BC. All right, let's keep it moving. BHE, Benchmark Electronics. I think this is a contract manufacturer. Recover off the 50-day moving average breakdown. Same thing with Borg Warner, ticker symbol BWA. This is an auto parts company. I really like this one because look, the earnings, when it last reported earnings, 22% gain. And now suddenly the market just kind of took it all the way back down 50-day moving average support. All this stock needs is for people to get re-excited about whatever excited them during last earnings, and this thing could really take off. Caterpillar, definitely on my list. Ticker symbol CAT. This has now become an AI play because of all the construction for data centers. And I really, really, really like this. This Caterpillar is pretty much at the top of my list for this week. Cirrus Logic, another semiconductor-related stock. Ticker symbol CRUS. You see the example. Actually, it broke down below its 50-day moving average on Friday, and it's recovered that with this nice 2.8% gain. We have a bounce. I actually have a position in this stock, so I'll actually be adding to my position. This is Diodes Incorporated, ticker symbol DIOD. Element Solutions, ticker symbol ESI. This is a fantastic bounce off of the 50-day moving average support line. I would even buy this one if it kind of pulled back a little bit on the next trading day. Form Factor, ticker symbol FORM, bounce off 50-day moving average support. And Ivanhoe Electric, ticker symbol IE. This has a little bit of upside to go to the 50-day moving average. Actually, I'll just draw this line again just to make it clear. So this would be the profit zone that I'd be targeting if I were to buy IE. And that is it. So hopefully that made sense in terms of why I think a bullish cycle has begun. But we have a very clear indicator if we get a close below, and in fact, let's just go to one of the indices like the S&P 500, and this is actually going to be tricky. Actually, let's go to the NASDAQ. NASDAQ will be easier because there's no support. There's also support at below this candle. So if it goes below here, we know that the bullish cycle has been a fake out, and the bearish cycle may have restarted. If the NASDAQ closes below its bullish engulfing candle, which would also be a close below the key 200-day moving average. And just for perspective, the NASDAQ hasn't traded below the 200-day moving average since last May 2025. All right. Please like and share this content if you liked it so the algorithm knows what's up. If you have any comments or feedback, put it down below, and subscribe to this channel if you want to get more content like this. Thanks for checking this out. This is Dr. Duru from Aha Analytics with the Market Breadth.